Roger Montgomery, and welcome to this second part in our Investing in Emerging Markets video series with June Lui, who's joining us from our partner Polen Capital in Hong Kong. June, you can be a bit more expansive in your answers this time. We've got a little bit of time. Explain to us your approach and Polen's approach to investing in emerging markets.
Yeah, we are a bottom-up investor. We spend most of our time in analyzing the fundamentals of companies. And we like high-quality companies which have competitive and sustainable business model. They have a big moat built around their business. And we like companies that have a very strong cash generation capability compounding for their shareholders, and also with a strong capital discipline in maintaining a healthy balance sheet. And we also put a lot of emphasis in management, their capability and track record and trustworthiness. We would like to see partner with management that are really understanding the business and also having good capital discipline in leading the business.
So shareholder friendly in terms of their capital approach.
Yeah.
Tell me something. In emerging markets, there are those who are concerned about governance. Can you talk a little bit about how you deal with that at Polen and in your stock selection process?
This is indeed an issue we have to be really mindful of. There are many companies in the emerging market space where they have poor governance. And so whether, for example, where we see the state-owned companies, where we see most of the governance problems, but also in privately owned companies, where some of the key founders or the key owners, they don't respect the minority shareholders' right in sharing the fair share of the success of the companies. So we really have to be careful in looking at if we have a strong governance framework to protect the interests of minority shareholders.
So I wasn't aware, June, that you can distinguish between those companies that might have a state ownership or a significant state ownership, and therefore more questions around governance, and those that don't. Is that easy to distinguish between?
Yes, indeed. Yeah,
oh,
we usually the first thing we look at is who are the owners that we have to entrust the company or the capital with. So the ownership is the first thing we look at.
So disclosure is not a problem for these businesses?
Yeah, no problem at all in this universe.
That's terrific. And then tell me, perhaps a question without notice. In China in particular, what are some of the sectors where you find a disproportionately large number of those companies?
Yeah, so mostly those in the sector which the state-owned companies dominate the market, where the banking system, right?
Yes.
So the banks, they are mostly doing the national service to provide buffer for the economic environment, and rather than growing the capital for shareholders. But then also in other sectors like the construction, the oil majors, and so there are a lot of state-owned companies around those sectors.
And again, another question without notice. Tell me, what are some of the growth rates of the ideal businesses that you've found? What can investors expect if they're investing in a portfolio that you're managing?
Yeah, so in the emerging market, in particular China, we are still seeing a lot of growth potential. Even though the overall macro environment is slowing, there are companies who are able to capture the future growth, the transformational growth. So we believe that a 15 to 20% growth would be something that we expect from the companies that we own.
That's amazing. June, you've been very generous with your time. Thanks again for joining us.
Thank you.
And thank you. We'll see you for part 3.